Good afternoon. Oh, morning. Sorry, it's your morning. It's my afternoon. It's the 24th of September for you, and I'm recording this because I'm afraid I'm away. But it's a Friday, the 24th of September, nearly the end of the third quarter. Isn't that terrifying how quickly that's gone? If you are a Profit First user, then your next Profit First distribution will be coming out on the 30th of September. That's quite exciting. So what are we talking about today? Cash flow versus profit. This is something that I'm absolutely passionate about, and it's something that I try to get my clients to understand so that they can actually start focusing on what their profit is and how they're going to increase it. So cash flow versus profit, what's the difference and which is more important? It's an age-old debate, cash flow or profit. Whilst the two are related, obviously, they're certainly not the same thing. And business owners quite often get into a muddle with them, and quite often they sacrifice one at the expense of the other. In the long term, a business needs both a positive cash flow and profits to be able to continue an operation. But which one should entrepreneurs be prioritizing? So what is cash flow? Cash flow is the money flowing in and out of a business, funnily enough. It refers to available funds rather than the money tied up in collected profits or hard assets. A business needs cash in order to be able to continue its operations. Without it, the owner can't pay its suppliers, its staff, utility bills, all of the usual things, or even purchase any stock or anything like that. If your business is a car, then cash flow is the petrol in the tank. You can't move forward without it. There are three main types of cash flow. Operating cash flow, that's the amount of cash that's actually generated from regular business operations, such as your sales, basically. Investing cash flow, that is cash earned from investments, such as securities, property, things like that. And financing cash flow. So this is the net cash generated to finance the company, including debt and dividend payments. Positive cash flow means that more cash is coming in than going out, and thus your business's liquid assets are increasing. Negative cash flow obviously means the opposite. It's normal to experience a short period of negative cash flow when you are investing in growth. Growth is expensive. But first of all, you've got to think about the fact that you've got to spend that money first before you generate more liquid assets in the future. But a sustained period of negative cash flow means that your business is running out of fuel and you need to take action and fill it up again quite quickly. So what is profit then? This could get confusing for people. In a nutshell, profit equals your revenue minus your expenses. Now, as a Profit First professional, I don't agree with that. I think it should be sales minus profit equals expenses, i.e. you take your profit first. But at the moment, we are talking on an accountancy basis and not on a Profit First basis. So profit equals revenue minus expenses. It's how much money your business has got left after you have deducted all your expenses from your total turnover. Again, there are three main types of profit. Gross profit. That's your revenue minus your cost of goods sold. This includes your variable costs, such as materials, labor, but not your fixed costs, such as rent and things like that, like your overheads. Number two is your operating profit, and this is revenue minus business costs. This figure includes fixed costs, such as your rent, but it doesn't include things like tax, interest payments on your debt, and income from investments that are outside the realm of the core business. And the third is net profit, which is revenue minus expenses, including tax and interest. So it's important to understand what the difference is between these three particular figures, the operating profit, the gross profit, and the net profit, so that you can understand which costs have the greatest impact on your net profit. So which is more important? Both cash flow and profit are incredibly important to the long-term success of any business. But in the short term, it may be slightly more prudent to prioritize one over the other. It depends on the situation. It's possible to be in profit yet run out of cash, and vice versa. Both matter hugely, but which one is more important depends on your current financial situation. So, for example, let's think about this. A business can turn a profit each month, but if that money is tied up in hard assets, then they may be unable to pay their employees and their suppliers, and therefore it'll be eventually forced to cease operation. In this instance, the business should prioritize cash flow. On the other hand, a business may have a very healthy cash flow but fail to make a profit due to substantial debt. So here it would be probably more prudent to prioritize paying off the debt in order to become more profitable. If you want to know more about paying off the debt, have a look at my website under the debt snowball. It's a very interesting concept by a guy called Dave Ramsey. Anyhow, I'm going off on a tangent now. So when a business fails to generate a profit over a sustained period of time, then cash flow will be negatively impacted. It's really important to balance that cash flow and that profit carefully, but it can be quite difficult to do, especially when you are a busy business owner and you're running the business and you've got loads and loads on your plate. For this reason, it's worth investing in a really good quality accountant who can help you maintain a healthy cash flow whilst generating profit, while not losing your mind in the process. Because while we're all delivering to our clients or our customers in whatever way we happen to, whether that's products or services, if we don't focus on the figures, then our business is not going to be a business for much longer. So with that salutary thought, I hope you have a lovely weekend, and I will see you next week, next Friday. Thank you all.